Hi, I just dropped in on you and I'm back. It's been a week, 2 weeks that we've been away from each other, but it's okay. Time heals all wounds, as they say, right? I literally just rolled in the door today. Why? Where were you, Russ? Russ was working at Amy Lou Foods, put in a 12-hour day today. How about how about them apples? Yeah, if you don't know, Amy Lou Foods, they make chicken sausage and chicken meatballs, stuff like that. Yeah, so we're just keeping it rolling, keeping it rolling. Got home, ate, showered, boom, down here talking with you. But yeah, seriously, it's crazy. I like that area. If you're not from Chicago, if you're in the United States, chances are people in your family ate food. They ate meat that came from the Union Stockyards area. That's where this building was. And I have a couple fun pictures to show you. Why? Because dividends were on my mind while I was working. If any of you, well, first, few fun facts that I looked up because I was bored, and this is what I do instead of just scrolling TikTok like some of my coworkers do. The Union Stockyards in Chicago at the end of the 19th century slaughtered about 400 million animals between 1865, the end of the Civil War, and 1900. So a lot of dead animals around there. And it was a huge area. People used to talk about the smells. There's a South Fork of the Chicago River. I hope you're not eating, by the way. Dinner time should be done, right? I'm cleared. There was yeah, we can look up Rexford Industrial, good old Matt. There's a South Fork of the Chicago River that goes right by the Union Stockyards. And there was so much animal waste and all that stuff in there that would decay that the gases would cause it to bubble. So they call it Bubbly Creek. I think there's a wine or a distillery, something like that, like a winery that's in Chicago called Bubbly Creek. So if you see Bubbly Creek, now you know why it's called that, because animals were decaying their waste and all that. Hey, fun fact. But what I did want to show you, everyone, and by the way, if this is your first time joining us, it's a little bit fun time for me. I just like to have fun. We'll talk investing. We'll look up some of your stocks like we're going to do for you, Matt. As always, hey, you guys help me as much as hopefully I can help you. So share what you've been buying this week, what you're targeting. I saw Nike jump this week. We're back to break even. How about that? And it's all on Vietnam. I did read today, going through some of the news, that apparently President Trump is going to enforce the tariffs on August 1st, not July 9th. So the futures are a little bit down. I don't know. They just keep getting pushed back and back. They did strike a deal with Vietnam, which, right, that was kind of the backup plan through his first term. Ixnayed the manufacturing aid, I think you would say it, on China. So plan B was to move to Vietnam. And then his second term, he's like, nope, we're going to tariff the hell out of Vietnam too. It was like 46%, right? Now it's supposed to be 20%, which is not as good as the 10% that it was, but 20 is better than 46. So that's funny. And all right, you guys mentioned Costco. So first of all, it's a Sunday. This picture that I took right here is a Lind truck, right? It's a little bit of show and tell. What's up, in Boom 210? This gentleman, I didn't want to get him in there, the truck driver. That tower is full of the liquid nitrogen gas that they use for manufacturing the chicken sausage, right? But this was a Lind, ticker LIN. I think Kevin might have invested in Lind one time. They do gases, a lot of air gases, oxygen, industrial gases. And this Lind truck, on a Sunday morning, I think I took this at about 7:30, 8 o'clock in the morning. He's out there working. If you're an investor in Lind, this guy drove his truck and he's helping you make money while you were probably eating breakfast somewhere. So think about that. How cool is that? That if you own, well, even if you invest in just the S&P 500, I own Lind. I don't individually own them, but Yeah, Michael, right. APD, Air Products and Chemicals, is the competitor. But yeah, I just thought that was kind of cool that you got a Lind truck filling up the Lind Tower. And then I kid you not, as I was walking to the bathroom, there I had to go through a break room, and this Amy Lou Foods was all shut down for the long weekend. So we were in there doing things. It's the time that manufacturing facilities like this, they'll take long weekends, they'll shut down Thursday night. Some of them run 3 shifts. They'll shut down Thursday night and open back up again Monday morning. So they try and cram in a bunch of upgrades, repairs. I saw they were repairing conveyor systems. We put in some rapid roll doors for them that separate like food processing areas. Anyway, so as I was walking there, look what I noticed in the garbage can. Boom, Costco pizza. Who eats Costco pizza? I ate Costco pizza on Saturday, yesterday. So that's kind of cool that, whoever was in this break room right there just had a Costco pizza. It's like $9 for a giant Costco pizza. So I know you guys, it's kind of funny that whoever mentioned cost. There we go. Kevin, I think one of you bought it. Anyway, you're thinking about Costco. I ate their pizza. It was $1.99 for the slice. I actually gave up the hot dog because, well, you know what, Eddie? It was edible. It's not world class pizza, but it's edible when you're out and you're hungry and you want a little snack. We don't do it all the time. But either way, if you think it's terrible, right there, the proof is in the pudding. Somebody bought that Costco pizza and hopefully they finished it. I didn't open up the box, but anyway, there's that. So we had Lind. I always want to say Linda, Lind, and that's a good point. $1 a week in Costco. I want to individually own them, but I have such a hard time paying up for what they're at. But Adam, what's up, man? I never got back to you. It's been a busy weekend. So yeah, you're in Chongqing, China. That's my best guess at saying that. And that's fine, man, too. Just the fact that you're here. You're in China. What are you doing watching this show? Come on. Get out there and, I don't know, walk the streets of Chongqing. I think I said that right. So, yeah, we'll look up news here in a minute. Happy to be back with all you guys. And what about the market this week? That's insane. It just goes to show you nobody knows what the hell the market's going to do. All-time highs again. And you know what? Visa's climbing. I was on Blossom telling somebody that it was really nice to see Visa at pushing 360 a share. I swear to God, it feels like it was a couple months ago that Visa was at 260, 270, 280. And it's just one of those great companies. And when you see those dips like that, those deep discount dips, I think I was going to throw 3 Ds at you. So I'm still getting caught up with who's here. Matt. Thanks, Matt. Matt, we talked on Blossom that you, in the last video I did where I broke out why what's not the whole reason in that video why I've been selling Nexstar. I did sell more shares this past week. If you get the free and fantabulous newsletter, then you'll see that. And, it's not so much, I don't think I was wrong on Nexstar because they still have, I think they're a very well-managed company. They have just really solid free cash flow. And I think I keyed in too much on the free cash flow and didn't think deeply enough or in depth enough about their industry and how that has been radically shifting. And yeah, they're going to try and put a rosy spin on it that they're evolving and adapting and doing things with digital, but I don't know if that's enough to move the needle. So who's at? Oh, Billy, are you talking about Visa? Was 35.50 or Costco? Because I'm pretty sure both of them were that cheap, and not a long time ago. That would have been probably 6, 7, 8 years, maybe something like that. If you're, Eddie, are the only one that has a rule never to buy stocks the first hour the market's open, So going back to my swing trading days, I know that is when there is the most volatility, usually for any market, any stock, the first hour and the last hour, or the last, power hour, they call it, the last half an hour or hour the market's open. A lot of people closing out positions, a lot of people opening positions in the first hour. So there's just a lot of volatility that goes on. So, but honestly, Eddie, it depends what you're buying. So if you're investing in a business, I don't see the difference, because unless something crazy happened, when we're buying a business, right, we're investing in the business. But if we're focused on the price, then I think we're speculating on the price. So that's just something to keep in mind. If you're going to buy and hold for 10 years, or that's, you know, I know some people have dinged me on saying, yeah, you said you were buying this thing for the long term. And it's like, yeah, but new facts came into my head. Something makes sense now that didn't make sense before, or vice versa. So, what are you supposed to do? Say, I think, yeah, I made a mistake buying this stock, or I don't think it's right for me and my goals. So, you know what I mean? I don't think you can fault somebody for selling out of a position to say, it's not what I expected, or it's just not for me anymore. And that goes to show why you should always have your own conviction and do your own due diligence, all that stuff we all like to say. So we the leader bought on Harrow Health too. No, I'm still on, dude. I think they have a lot of growth ahead of them. Talk about an expanding industry. All the boomers, all the silver tsunami is coming. More people are going to need their products for cataracts, for dry eye disease, for a lot of things that seniors get, and they're growing and they're expanding. So I think Harrow is the opposite. Yeah, they don't pay a dividend. That's probably I think that's my only non-dividend paying individual stock right now. But man, I'm holding them for a while. I think it's, as I equated Nexstar, it would be like buying in 1898 the world's best managed carriage horse and buggy company, right? But the automobile came. People didn't want the automobile anymore. So, through no fault of that company, the number one horse and buggy manufacturer at the end of the 19th century, just the market changed, industry changed, people changed what they wanted, and sometimes that happens. So, but yeah, man. I get you off the ledge. But I'm not on the ledge about Harrow. I think I've said that, I could be wrong. I could have my conviction misplaced, I guess. But they're still doing everything I expected them to do. It's going to be more of a volatile position. So, but yeah, I'm still good with Harrow. Narrow Health, you're too funny. Yeah, and actually, I was looking at. Here, let me show you guys this. Let me hide you, Bubble, to tie into what you were saying about. If you guys ever go to finviz.com, I like Finviz. FINVIZ.com. Let's see, am I showing that? Let me do that. Yeah. So if you go to Finviz, there's just tons of information. It's good. It's even good for like a news aggregator. You can click on news and there you go, make it a little bigger. They got blogs and news and like right there. I mean, it's just such a handy site for free, ETF news, whatever you want. But one of the fun ones is, let me zoom in on that. Up at the top, if you go to groups and you close the ad, thank you. They will show you the 1 day, 1 week, 1 month, 3 month, half year, 1 year, and year-to-date performance. And it's kind of fun to look for ideas where maybe not so much in the 1 day, because that's really short term. Same with 1 week. But we can see the 1 week utilities were the worst performer, but everything is up 0.67% and basic materials up 3%. But when there are beaten down sectors, sometimes some companies within that sector will unfairly be beaten down as well. That could be a good company, but the whole sector is selling off. So if you look at the longer term, like 3 month, Over the last 3 months, energy down 5%, 4.5, almost 5%. Healthcare down 3%. So you can look within these sectors for ideas. And, I'm sure you can even click on healthcare and it'll bring up charts. Now, this is price. Remember the charts, and they call it the language of the stock market, but you can do different sorts and PE ratios, look for different things, free cash flow, who's good and not. But yeah, so that's FinViz. So let me get caught up on you guys, and then we'll go take a look at Rexford. Yeah, we'll see let me get Seeking Alpha preloaded, just give you a flavor of some of the headlines of some of the analysts and the quant, which I know also Seeking Alpha just had a sale. All right, come back to you guys. Oh, Shamir, what's up, man? You popped in. It had been a minute, so did you answer me? I asked you if you ever made it to the MSI, the Museum of Science and Industry in Chicago, for your 007 James Bond. What was it? His gadgets and gizmos, things like that. I think you're doing text to speech, right? What warehouse do you see have increased use? Well, specifically, I mean, if you're talking like a chain, none come to mind specifically that I've seen new ones, but here around Chicago area, like it's a popular hub in the Midwest. Prologis is the Cadillac of the industrial REITs. Their buildings, and we do work for Prologis buildings. CBRE will do Link, First Industrial, sometimes ticker FR. They're a publicly traded company. Colliers. There's a whole bunch of property managers that will do. Hiffman is another one. But yeah, the Prologis buildings are always the most well kept. When a tenant moves out, they get the stuff fixed and they fix it right. And I think they deal with the tenants later. And what I see some of the lower, I don't want to say lower, but maybe not as big budgeted property managers, they try to fight with the tenants that are moving out or moving in to get things done. But I don't know how Prologis does it, but boom, everything is nice, repaired, good to go. So don't hear a lot. They'll be more expensive per square foot, but you don't hear a lot of complaints about Prologis. So they are, and that's just from my end, walking the buildings, boots on the ground, seeing their properties that we work at. So yeah, Adam, I shared from the last Acquirers podcast with Toby Carlisle. Really interesting. Their guest, who's named Zeke, I forget his last name, is a fund manager, and he was mentioning how he thinks UNH is a great buy, and he's been buying UNH. So, yeah, my thoughts on it, I'm going to sit on the sidelines. I still think there's too much uncertainty. I know they're a massive company, but it does feel like the winds of change are blowing. And again, I've said I could be wrong, completely wrong. But, it's kind of been on the back burner, but a lot of that Medicare and Medicaid, if there's fraud there, and I know I've said that, if they get found guilty of Medicare fraud, then that's 5 years they can't participate in that. And I think Medicare is like almost half, 40% maybe, or almost 50% of their revenue for United Health. But there's just so much uncertainty with the sector, with government, with regulations, with the business model. I don't know. It's too much uncertainty to me. I don't think that I feel like when I look at a Visa or a Costco that I can make as educated as a guess. But, I'm sure they'll be fine. But personally for me, I'm going to sit on the sidelines for United Health. Yeah, and there's that famous quote. Was it Keynes, right? John Maynard Keynes, who said, when the facts change, I change my mind. What do you do? Something like that. But because it almost sounds dishonest not to. I mean, could you imagine? It's like, yeah, I don't feel comfortable holding this stock anymore. I think I've learned something. and it doesn't really fit my overall goals or sentiment, and I have no more conviction for it. But when I bought it, I told people I'm going to hold it for a long, long time. So I got to hold it, Hey, sometimes it works out. AT&T, right? That sucker's at almost $30 a share, and I jumped out at 18, and I was basically breaking even. So there you go. I lost my conviction. Ryan Williams sold, so I'm not by myself on AT&T, and it's been a great performing stock to be in. All right, we'll look at Rexford. Tony, I thought about selling a covered call, a really aggressive one at 175, but at the time I was thinking of it. So first of all, I kind of needed the money. I pushed it to the very end. I needed the money to not incur interest charges on the credit card. But of course, if I would have just held Nexstar up until it even touched 184 this week, if I would have just held there instead of when I sold those first 23 shares at like 164 and change, hey, it happens. But the reason I didn't do that is because there's been times, and I know it could happen, Tony, is that if I were to sell that 175 aggressive call and say I could even pull in $600-700 for it, something crazy might happen, and bing, bang, boom, we might be back in the 140s for a while. So then I would be down on the position. Yeah, I wanted the certainty of getting the full amount, and I was even able to sell for a little bit over. I sold 25 shares at 181, and I have 25 shares left. I tried to knock those out at 185, and it hit 184 and change this week. So we'll see if I can get that. And then that's probably farting around, right? Getting silly with it. But yeah, that's why I didn't want to get stuck. I didn't want something to happen, and then, that cash could have been put to something better. And here I am sitting with a covered call option, and the stock is down, and I'd have to sell lower than where it is. If I bought the call option back, you know how it goes. So that's why I didn't. I just decided to move on. And then Shamir, you didn't make it down. That's okay. Hey, my family, we were kicking around ideas of, because we got back from the UK, and it was $1.36 for every $1 pound sterling. So we're losing out, right? We're losing out on that. And I looked at Canada. I think it was like 73 cents for every dollar. So I told my family, I'm like, we got to go to Canada so we can be on the other side of our money being worth more instead of not worth as much as the local currency. But we actually, my wife was just looking on a map. She's like, look at Montreal and Ottawa. They look nice. So I know you're up that way. I don't know if we'd go, that would be next year if even. But I do want to go to Boston. That's been one of my bucket lists. So that might be next year. I would like to check out Boston, Beantown. What happens when you dry throat breathing? Salute. That's good vodka. Could you imagine? I would be passed out sick. But is anyone from Boston? Any of you guys and girls? Yeah, Janice, Income Factory is really interesting. Stephen Bavaria, he's a Seeking Alpha author. What was I pulling up Seeking Alpha for? Someone remind me. I was going to show you guys something on it. Oh, I think when we look up Rexford, that's what it is, because I'm about to jump over there and do the news. So, yeah, Income Factory, really good book. I've read it twice, but I've only read the audiobook. I haven't read the paper version. So I still need to do that. And it's a good book. It puts forth a different idea about not focusing on. So Stephen Bavaria sells it as, a lot of us don't think about capital appreciation in the way that we do like a job. People will say, how much does it pay? What's the income? What's your income going to be for this job? You got a raise. Now what's your income? That type of thing. So kind of applying that idea to mostly business development companies, BDCs that pay a higher yield, but the stock price doesn't really move all that much. And sometimes it'll just be flat, but he's okay with that because it rhymed. He wants to just get that income, put it into more shares, and then that keeps growing. It's just that snowball, right? So hence the factory. It's an income factory spitting out cash. And he lays it out beautifully why you want to do it. Some of the good, the bad, could be indifferent. And I think you'll enjoy it. I'd be curious to hear what you think about it. And I read that on Libby, with the Libby app. If you have a library card, anybody listening, Libby, Libby, and Hoopla, Hoopla, are two different apps. And you plug in your library card, and that's it. You get to read audiobooks. Some of them have movies, they have magazines, different things like that. And I just finished Grant, the Ulysses S. Grant book by Ron Chernow. It was 48 hours long. So I'm behind on podcasts and that. But it was a good book. Really enjoy Ron Chernow. And he put out a book on Mark Twain. But when they're that popular, you got to wait in line. So it'll be a few months before I can read that. Or I could just go to Audible and pay money. But I'm frugal. That's how I get money to invest. I do frugal things. Right? Like eating cat food that's on clearance at the grocery store. We were talking about UNH. So you're not super concerned. Yeah, and again, Adam, I think it's highly unlikely to happen. It's still in the realm of possibility, but I don't know. That's just my personal thought on it. And believe me, I hope you and everyone else who buys United Health makes a lot of money. European Vacation. Good movie, by the way, with Chevy Chase, right? Beverly D'Angelo. Canada all the time, 50 cents American, get $1 Canadian. Yeah, it's not that much now, but it's close. It's close. All right, here we go. So let's look at the news. And then for you, Matt, we will do Rexford, right? Yeah, Rexford is what you wanted. Where am I going here? Oh, duh. Here we are. Everybody, in the land of simply safe dividends. So we'll do news first. I usually set this up. What do we got to go back? 2 weeks? When was I gone? I was gone. Let's see. I think we talked about Ventas last. So buckle in, right? I think so. As usual, I'm going to go through these quick because now we got 2 weeks to catch up on here. So make it big enough if you want to read the little blurb that Simply Safe has here. Just hit the pause button and you can read it. So UTG, Reeves Utility Income Fund, raised the dividend 5.3%. Dividend downgrade for Macy's. So like Macy's. Well, I don't know if I ever buy anything there. But anyway, Macy's got a dividend downgrade to 40 unsafe. They refreshed their outlook on B&G Foods, which I owned, one of the very first dividend stocks I bought, chasing that yield. Luckily, I got out as I started learning. Didn't lose any money, but I definitely chased yield. And it's a packaged food and meat company. It has a 17% yield. Definitely speculative. Bucket of yuck right there. Stay away from B&G Foods unless you're okay with speculating. General Mills raised the dividend 1.7%, and there you go. They have paid uninterrupted dividends since 1898, and they may be undervalued. So are you buying General Mills? I'm not. More food. Kroger. Should just start saying Crozier. Crozier hiked the dividend 9.4%, which is their 20th consecutive raise. That's a nice raise, almost 10%. Eastman Chemicals, they reaffirmed their safety score. A lot of the chemical companies are down, right? Dow Chemical, LyondellBasell, a lot of the chemical commodity companies, right? Because as I see it, a company that is buying their product, do they really care where they get their chemicals from, if they need a polyolefin, right, to make plastics. If it came, I don't even know if Eastman makes it, but if you had to choose between Eastman, Dow, and Lyondell, like, if it's cheap, just you're gonna buy it from them. Or you're gonna buy the cheaper one, usually is how commodities go. People aren't that picky. Annaly Capital, they refreshed at 40. I know I said I was gonna go quick, right? And that was too quick. Annaly Capital, it's a mortgage REIT. I stay away, not it's a high yielder, 14.37%, but I think he mentions them in the Income Factory. That's an Income Factory type stock. And you would want to go to dividendchannel.com to put in a drip return calculator. That might be a fun one. Remind me if you want to do that. Maybe we can do Annaly drip calculator just to see, because now I'm curious. I want to know. There you go. General Mills, they reaffirmed their safety score after they gave a raise. Oh, and they're leaning into protein trends. Go figure. Here we go. I know it's coming. Banks. So this is going to be real quick. It's all banks. Goldman Sachs raised their dividend 33%. These all happened July 1st. JP Morgan, 7.1% dividend raise. And my God, that one really chaps my behind. Maybe I'll tell you a little story about JP Morgan. Wells Fargo raised the dividend 13%. We got more banks coming. Bank of America, 7.7% dividend raise. How many more? I think this was the last one. Morgan Stanley, 8.1%. And that was it. Refresh their outlook on Canadian Natural. Still, I tell you, that still sounds like a Canadian beer to me. Good old Canadian Natural. And lastly, H.B. Fuller, another specialty chemical company. They reaffirmed their score. Look at just a 52-week low. All the specialty chemical companies, and I don't remember why. I know it's something to do with the commodity product, and then Matt, for you, we'll do two things on Rexford. I know we've covered them before here, talked about them, but yeah, industrial REITs. I think it's all has to do with the Trump tariffs, right? People are thinking there might not be as much activity if we hit a recession, all that. So Rexford, 81, very safe, almost a 5% yield. Yeah, still way. Geez, I remember this when this was in the mid 40s and I was looking at it. Holy cow, it just keeps falling. So we'll see what the headlines are for Seeking Alpha. Oh, here we go. January 14th, they reaffirmed the safety score of 81. This is too big. Let me fit that on the screen. 11 years dividend growth. So they raised that dividend very fast, but in February 25, they did slow it way the hell down. So they really hit the brakes on that dividend raise, which is always, maybe like a caution flag. It's not a slam dunk red flag. They went ex-dividend June 30th. So, but yeah, they're showing they're potentially way, way undervalued using the price adjusted funds from operation ratio. Yeah, everything it looks cheap, but we got to know why. You can't just buy it because it looks cheap. You have to have a good reason for that. Yeah, we don't pay attention to free cash flow payout ratio for REITs. So the AFFO ratio, it looks good. That's fine. And yeah, look at, there's still the AFFO per share is still growing every year up and to the right. They expect negative AFFO share growth next year. So we'll see if that happens. But yeah, sales are still double digits, high 20. Geez, Louise, 40% sales growth in 22. So on paper, they look like a really strong company. Shares outstanding, not too worried about that because they're a REIT. That's how they bring in more money to keep growing. So if they're diluting shares, remember, if that's going up into the right, you want to see the total sales going up into the right and the adjusted funds from operations going up into the right. But you always have to look too at the debt, right? Like you want to know the money coming in. You want to know the debt. Like these are just really quick metrics. I listened to, when I was on the plane to Florida, coming from Florida, Jim Chanos was on Odd Lots. And I think he was talking about Equinix. And I believe he said that Equinix, the EBITDA was as much as I think the dividend payment and the interest on the debt, or it was not as much. It's a little fuzzy, but the point being that they were going to have to borrow money to pay the interest and the dividend. So something had to give, which is why I think Jim Chanos is shorting Equinix. I think it's EQR or EQIX. But yeah, that might be an interesting one to look at. Anyway, so it just looks solid. And this is what I remember thinking that, yeah, their debt's low. It just looks good on paper. But then for you, Matt, let me share this instead. So we'll put in here on Seeking Alpha with REXR, just to see so the analysts in Wall Street say buy. They almost always say buy for everything, but the quant, blow that up. Quant says hold. And here's some of the headlines from the analysts is that, nobody I know. Anyway, you get a hold, a strong buy June 5th, a hold on May 5th from the value investor, and yeah, May 5th. So some of these were buys. Looks like it's mostly holds and buys. So there you go. That's that. And let me see real quick if I can find Equinix. Not Equifax, EQIX, right? Yeah, EQIX. So interesting data. Jim Chanos is short this. Holy smokes, look at that, $787 a share. And they're down there. But I don't know if I'll be able to tell from the data that Simply Safe gives. But yeah, they grow the dividend fast. Let's see. Yeah, so again, the AFFO payout ratio looks good. Still free cash. Well, that's going up into the right. They're expected to drop off the next 12 months. No, this is Equinix again. AFFO per share is growing. Yeah, they barely dilute the shareholder. So down there, sales growth. I don't know. I'd have to. If anybody wants to listen, again, just type in odd lots and look for the Jim Chanos from a week and a half ago. He'll give his reason why. But let me see their debt. Yeah, let's see, net debt isn't that bad. I think he was just all about the EBITDA. He said the net debt to EBITDA. See, that's not that bad. So who knows? Maybe he's wrong. I don't know. That's his opinion. But let me take a sip. So we're back. It's a lot of rambling, right? But I hope that helps a lot of you. Oh, Houston. Phil, how's I got to watch that. Phil Malek. I had to think, is that like a man name with the last name Hunt and his first name is Michael. Mr. Hunt, first name Mike. I think I could say it like that. So Phil Malek. Like Phil McCracken, right? How's the rain down there? I saw 100 people have been killed in that Texas flooding, man. That's awful. Oh, what's up, Lucas? Dude, news you can use, yeah. Sometimes I think it goes a little fast, but I don't know. Let me know. Did you enjoy that? Is it good? Is it okay? Yep, I'm back. I know some of you can't get on right away, but dude, I'm back. I've been busy. It's just been every day. What'd you guys do for Independence Day? Did you do anything fun? I don't know. CDNS. Yeah. Oh, we didn't do the NLY. That'll, I can't write my left hand. It looks like a child wrote that, writing with my left hand. Yeah, I'll look at CDNS. I have no fear of growth stocks, right? I did say that, Eddie, and between us, I just made a trade today. So I don't know. I'll save that for the end because everybody will tune out. If I say I just traded for Josh Allen, that's near Austin, San Antonio. Yeah, Texas is big, dude, right? All right. Let's do what would be a good comp? Just for the heck of it, we'll comp Annaly Capital we'll just do VOO. Just something simple, just to see what it does. God bless you delivering babies, Janice. Good for you. How do you like your work? Like, do you want to retire early? Do you like your work? I think you're a little bit older than me. Um, yeah, how does that go? Do you enjoy what you do? And while you're answering that, I'm going to show you guys how you can do this for any stock. But first, for Chris, we'll look up CDNS. Cadence Design. I know nothing about them. They're at the high end of the 52-week range. We'll go through. How long have they been around? Formal verification platform. Look how long this is. I really would need to understand this. I mean, that's a lot of what they do. What was the one? We looked at one last time I was on. It was 2 sentences. It might have been, I think it was the one I've been buying. The one that Louis helped me talk about. It was, oh my God, they spun out of Pfizer in 1952. It was, oh my goodness, right? Cognitive decline is real. This is crazy. Ticker ZTS, Zoetis. My goodness. Hey, I've been at it. I was up 5:30, everyone. I left the house, right? Been working pulled out a 12-hour day today. Earnings per share. We're on Cadence Design Systems. Let me just see if everything looks solid. I mean, if they're a growth stock, you're paying up for that. Sales growth just keeps growing. They're even buying back shares. Yeah, real solid. Everything on paper here looks solid, but again, this doesn't tell you where the business is going. It's a snapshot of exactly where they are and where they came from, and no net debt. Dude, it looks like a big thumbs up from me, but I know nothing about this company. So we'd have to understand, like, the sector they're in and what kind of a moat they have, if any, and what could deteriorate that moat and how quickly. So that's Cadence Design. Looks good. So let's see. We were going to go to dividendchannel.com, and anyone can do this. You go to dividendchannel.com, and right here, we're already on calculator. So if you weren't, just go to calculator, and we'll compare 2 symbols. So I wanted to do NLY, Annaly Capital, and we'll just go back. We'll go back 10 years. How about 20 years? We'll make it we'll go back 10 years, which is 2015. So we'll pull up, how about July 6th? So this is a company I'll show you on Simply Safe. Cuts the dividend a lot. It's a mortgage REIT. They yo-yo all over the place. So you put in the 2 tickers if you want, or compare. I could have done the S&P, but we'll just do it a VOO, which is the S&P 500. And over the last 10 years, I have to share this tab. I've learned my lesson. Let's see. Here we go. They give you 2 windows here, and I know I'm blocking one of them, but in the bottom right there, how about that? The bottom left is the without dividends reinvested, and the top is with dividends reinvested. So that's income factory stuff, reinvesting dividends. So yeah, I mean, look at what that high yield did. So VOO has had a total return with dividends reinvested 261%, and Annaly 78%, right? We'll even be nice and say it's 80%. So yeah, 261% for the boring old VOO, S&P 500, versus a very high yielding REIT in Annaly Capital, ticker NLY. So yeah, you guys can do that. You have fun with any stocks. You can back test it, but I just want to show you the dividend chart on Annaly. It's a mortgage REIT. I struggle to understand mortgage REITs. It's very volatile. Interest rates, right? Big factor on them. Where if a company doesn't have any debt, like Cadence, who cares what the interest rate's at? If they don't have, if they have no debt, net debt would affect it. But if they have no debt, then that's why a good balance sheet is good, or favorable. So here's Annaly Capital. It's just all they do is cut, right? They rose like banshees out of 2008, and then it's just cutting, flat, cutting, flat. So yeah, I stay away. And it just goes to show you, just don't chase yield. And there's somebody out there, earnings payout ratio. That's why it keeps getting too high. So yuck, yuck. Don't chase yield. FedEx or UPS? Oh, I get it. Funny. Which I don't think I haven't seen you post before, Arco, but I like the joke. I like your humor. I like the cut of your jib, shipmate. Oh, dude, Boaz. So I think I said for me 12 hours. You said a normal workday, but you guys get a lot more time off, don't you? I've heard that in Japan or China. I think Japan, they do the 696, I think, is you work from 6 a.m. to 9 p.m. 6 days a week. Is that right? 696. Good. I'm glad you love it. Retires, but you're going to retire as soon as you can. You put in your time. You've delivered. Hey, I've delivered a baby too. That was crazy, right? That was completely unintentional. So I kind of know what you're at, but at least Janice, you were in the hospital. I was thrust into it at a moment's notice in my bathroom. So I had to deliver my youngest daughter in an emergency. And it was adrenaline inducing. How about that? So that may have been the most terrified that I ever was in my life. And I want to say I was so terrified that I ended up not being scared, if that makes sense. But what I do remember about that night is I had one of the worst killer headaches ever. So that's adrenaline, right? You usually get a headache later. Boston Scientific. I don't know what you guys are talking about there. No way. You can't wait, Steve. So you can't go on to all REITs and see anything. They want money. They put the whole website behind a paywall. Wow. No, time off of work. Like I think that people, I don't know. I've heard that in Europe. I think France maybe, or just Europe, that the work days I think are longer, but you have more days off or something like that to compensate, if that's a good way of putting it. Yeah, like more time of work. That's your reward. But yeah, all REITs. No way, dude. We didn't look at the futures, the futes they call them, right? I'm hoping for a pullback. I think it's just again run up too far, too fast. So this should be the futes. They call them the futures. The futures, right? Yeah, it looks down a little bit, nothing crazy. And even the VIX, the fear gauge, the S&P 500 volatility index is down too. So a lot of indecision, and the S&P is down almost 0.5%. It's nothing. We'll see. We'll see what tomorrow morning brings. But oh, you need to pay to see the scores, like 80 out of 100. Oh, I see, Steve. Yeah, you know what? I guess it happens. People, God bless everybody that wants money for stuff, and I don't think I'll ever be there because again, this is like a hobby for me. But you get what you get. Like I read a lot. Like that was actually in which I'm contacting him tomorrow to try and restart the scheduling. Alex Morris, who wrote Buffett and Munger Unscripted, he did the same thing I did. Listen to every Berkshire annual meeting twice since 1994. But he turned it into a book, a fantastic book. And it's something I'm going to reference probably for the rest of my life. And I've been taking my time going through a couple pages a day and just absorbing and underlining. And in one of the annual meetings, Warren was talking about the importance of investing in the business and buying and selling stock as if you were buying the entire business, focusing on the business fundamentals and letting the business guide your buying and selling decisions. because if you're letting price decide for you, right, then that is speculating. So when you make decisions based on business fundamentals, you're investing. But when you make decisions based on price movements, you're speculating on price. So, but then again, right, there's a caveat to everything because he says he should have sold whatever Coca-Cola when it was at a PE of 60 in the late 90s. And even then, I will push back on Warren and say, but you didn't sell. You still received dividends. Coca-Cola still was increasing earnings, putting out product. They have pricing power. So when inflation goes up, they were able to leapfrog or pace inflation, charge more for their products. People kept buying them. So the company kept becoming more valuable. So yes, you should have, says he should have sold, but I know that with dividends reinvested from the late 90s, Coca-Cola is way higher than where it is if he would have just sold and not done anything. So that's what I mean. You can even push back on every statement. You can almost find there's some kind of caveat, some kind of, I don't know, backdoor way around it or something. But what are you guys looking at this week? I want to know now. Tell me. Put it in the chat. Whatever the 58, 41 of you drop down to. What are you buying? Share with all of us what you're going to get this week or what you're looking at. I don't care. It could just be on your watch list. Because for me, probably going to buy more Zoetis. I've got a lot of cash now. I would love to see the market just implode. But wait, maybe if Nexstar can hit 185, I'll put another sell order in, just fully move out. And it hurts. We were getting almost $800 a year from Nexstar, but this is where I'm going to principles. I'm looking at my, the business, and I think there's better opportunity elsewhere. There we go. That's what I'm talking about. Philby's. Oh, Novo. They've been down. They have been beaten down. See how many of these you can stump Russ, right? Well, I don't remember these. Those are ETFs and SCHD. Who's the XL family? What family is that? Let me put it in. Oh, Spider. Yeah. That's industrials. There's XLI. Okay. Hey, that's cool. Hershey's looking good with cocoa downtrend. Yeah, I saw Hershey fell again. What are they at? I didn't see what they ended the week at. $176. Yeah, so they've come down a little bit. But I will say though, the market's been ripping. I love it. I know I updated the banner. So we use Empower, and it's close, but I'm trying to figure conservatively, and our net worth, it tells me we're like 92% of the way to being net worth millionaires, but I like to just give that wiggle room because with Empower, I don't know if any of you out there use Empower Finance, they use a Zestimate, right? The Zillow estimate on your house. So it has an estimate for our house, and then it sees what we have remaining on the mortgage. And then that's part of our net worth, that gap right there. So, but yeah, with the market, it's just every day I'm like, wow, we're going to be net worth millionaires before the fall, but nothing's going to go up in a straight line. And I fully expect there to be a pullback, but it's okay. It's okay. Waste management, that's another on my list. Matt, VFIAX. I don't remember VFIX. That's a mutual fund. And Zoetis. Yeah, I'm liking Zoetis here. And again, it's one of the few that was on my radar that I'm buying. It's at a good price. Of course, it dropped to 152 earlier in the week. I didn't get to jump on that. So with Costco, that's fun. How are you going to do that, Tony? Do you buy a whole share? Because I like full shares, but are you buying like $1 a week, $5.25 a week? How do you do that? Janice, more SCHD and JEPQ. I think JEPQ is the reasonable middle ground between somebody that says, I'll never buy a high yield derivative income in ETF, and then other people that are buying MicroStrat, MSTY, and TSLY, all the yield max ones. They all end in Y, don't they? CONY. That's their jam. So I think JepQ is solid. Ah, you're buying Sysam FX AIX. That's Fidelity, right? That's not the FZ. I forget the zero fund one. I'm boring to boring people. Now you're talking about boring as the attitude, the disposition, or boring as in, we're like the boring company that Elon's in, like boring holes in the ground, right? Oh wow, Bubble, you're selling puts on SCHD. That's interesting. You don't hear that a lot. Yeah, that could be good. I do have that covered call out on. Oh, Matt, I was starting to tell Matt about that, or what we talked about on Vici. So I listed that on the video in the cells because I don't know. Just again, I'm playing catch up. Million things going on in my mind, and I'm like, I sold a covered call. Oh yeah, that goes in the sold. No, it should have been in the option income, or but need something that's down. I didn't write it down. Cash. Speaking of cash, somebody, see if I can share it. I may have screenshotted it, but somebody on social media had a place that they were holding cash. Oh, I don't know where I put that. I can't find it. But it was very interesting. I think it might have been on Blossom. I got to find that. I think I got it somewhere. Anyway, they were holding their cash somewhere. I don't know. This is boring to you now, I know, but it could have been. Yeah, I can't remember. It was a fun. It was not like yeah, I don't know. It was it was interesting. I was thinking like I should have my cash there for the short term until I find something to buy. Yeah, but some people say they're buying cash, right? Like if you're investing in just holding cash, I don't know, buying cash. Want to buy Otis? I think Otis is solid. Hassan, boring investments. Hey, and it's like our guy George Soros said, right, that if investing is exciting, you're probably doing something wrong. It should be boring. You're probably not making money. I think he said if it's exciting to you and you're having fun. There you go. VFIAX is the Vanguard S&P 500 mutual fund. Yeah, because the only option I have for that in my 401k is DFUSX, which is Dimensional Funds version of the S&P 500, which is also low. I think it's 0.05% expense ratio. Not as cheap as Vanguard, but Tony, you're buying 200 Costco weekly to get to 100 shares. Dude, that is yeah, I'd love to get to that, and that's probably the smart move. So, Shannon, you are buying SCHD and VTI every month. Yeah, that's smart. I like buying VTI. Also, Archer Daniels, Pepsi, and Waste Management. Like Waste Management. Matt, we have looked at QQQI before, and it is it's just the triple Qs that one of those incomes they're selling calls on it, right? Yeah, right. Cash. I think they said the dollars had its worst start in 50 years. Worst start to the year. That's all got to account for something eventually. I mean, where it goes, I don't know. I don't know enough about that where it's going to go, but it's a real thing. It's real, and so far the market could care less. Yeah, that's a good one. What do you think, Schmacky? What do you think about that? I mean, you think what's your take on that? Let us know. I love Josh Brown. I didn't hear him say that, but that's too funny. Maybe I did hear him say that. Yeah. The dollar's a meme coin now. Yeah, that's right. Because all the foreign companies, it's a benefit for them when our dollar is weak. So, because their currencies are worth more, right? When they're converting, I think. I think we got to everything. Oh, what didn't we look up here? Oh no, I looked up CDNS. My handwriting is so bad it literally looks like a small child wrote it. Oh my god. Do you know what time it is, everybody? It's time for this guy to be done for today because literally, it's self-indulgent. I've been going since early this morning. So, but hey, you get the money, we take trips, we invest it, we grow it. It's how I'm going to be a net worth millionaire. I'm excited, but it's just a number on paper. Money won't buy you happiness. It can buy you comfort. It gives you options. It can give you options to do things that make you happy. But yeah, in and of itself, the paper, collecting all that paper isn't going to make you happy. But you know what? I'm going to be there easily by the time I'm 50. God forbid something crazy doesn't happen. By the time I'm 50, I'll be a net worth millionaire. And a lot of you I know think that sounds like, oh, big deal. Well, to me, it's a big deal because I didn't really start getting serious about personal finance till I was about 40. And I'm 47 now. So that is huge. And it's been a lot of work, been a lot of learning. I've made some mistakes. I'm going to continue to make mistakes, but I love sharing it with you. And I love hearing you guys tell me when I'm wrong and call me out on stuff, but don't be a dick about it. Do constructive criticism. There's a way, and the last thing I'll say this is that always remember, separate the ideas from the person. Always, always, always attack the ideas and never the person, because otherwise you look like an asshole. So yeah, don't do that. So if I'm wrong, you could feel free to attack my ideas, but try and leave me out of it, I guess. I don't know. I don't know. I'm tired. I'm gonna go hang out with for a little bit, and we'll see you next week. So long, everybody.